All right. Hey, everyone. Mark here, Mark P. Markets. Thank you for joining me for another Bitcoin video analysis. Let me move my microphone. Hold on, you guys. All right, that should be a little bit better. Okay, so welcome to the stream. If you're new here, let me explain how this works. All right, really quick, and I'll tell you what we're up to here. Hold on, let me just move this over because that's my TradingView. I am simulcasting on TradingView. Although no one watches me over there, I'm still simulcasting on there. Anyway, all right, so real quick, here's how this works. So first, I'm going to run through the economic calendar. You should pull up your economic calendar, doesn't matter what platform it's on. TradingView has a nice one you can work with. We're going to talk about a couple of things there very quickly. Then I'm going to get into this chart situation here and this environment. Now, real quick, to some of my members, I have been extremely consumed by getting our new website up. And so I'm sorry I've been absent from the active investor chat. I saw a number of questions in there that I would like to answer. I mean, Alice had a question. Alex had a question. I also saw a question from Sam. So I will answer those questions, and I'll try to answer them briefly here in this stream as well. But I appreciate the questions, and I will answer them. I appreciate your patience. I mean, I've been dealing with you deal with these companies and you deal with incompetent support. You contact support for help and you deal with employees that don't understand how their own company works. So I've been dealing with that. But anyway, once the new website is up, things will be a lot smoother. So again, I appreciate your patience. Okay, so first things first, let's get this thing started, shall we? All right, so I'm trying to go for a half hour. I usually go a little bit over, but let's see if I can do it today. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, so TradingView people, if you're watching me over there, you can just say hello in the chat or something like that. Now would be a good time to ask a question or something if you happen to be a member. I'm answering questions from members only because that just allows me to get the stream done more on time. All right, so let me just say hello to a few people real quick. And by the way, if you want to share what city, hold on, what city or what country that you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right, is this right? I only have a couple of people watching me on YouTube. That can't be right. I mean, my numbers have been very low. I'm hoping it's just like the season again, but I don't know. Maybe people are just not liking my content. I don't know what it is. Anyway, all right. So let's talk about the economic calendar really quick. All right. So we have a couple of things this week. We're going to begin with, I believe today's the 9th. I believe it's on Wednesday is the first significant data coming out. And we have the PPI, okay, the price producer index. We also have FOMC meeting minutes on that day. Okay, that's all for US. Those reports can move markets intraday. I wouldn't say they're big major reports, especially something like FOMC meeting minutes. Something like that can move the markets intraday. Like, so if you have day trades on and futures and stuff like that, the market can be affected briefly, but those aren't like major numbers. All right. On Thursday, we have the CPI. Okay. The consumer price index, and that is a unit of that's what the Fed uses. One of the things that the Fed uses to measure inflation. So the CPI, that's usually a market moving type of report. So that's one you want to keep an eye on. That's on Thursday, which is, I believe, the 12th. And then on Friday, we have Michigan consumer sentiment, which is usually not a major market mover. These are all US numbers, by the way. Okay, we're not looking at anything outside of US numbers here. The other reports, if there's anything from another country, it's really not a big deal, right? It's not really anything. I have not seen anything that has any major effect, all right? Watching for things that can affect the dollar. Now, of course, we have some geopolitical tensions going on right now. No one saw this coming, okay? None of the experts that I watch were able to forecast something like this. So, again, I don't see much of a negative effect in the markets. We can touch on that a bit, but that's pretty much what we're looking at in terms of the economic calendar. So there's a couple of items you want to be aware of them, especially if you're involved in Forex, because those markets can get, they can react to something like a CPI, pretty much, which I would say is the heaviest report for this week. So you don't want to be going crazy taking positions into such numbers. If you have an opportunity to take profits off the table, you should consider that going into the numbers. Volume can also get erratic or can get smaller, right? Less activity going into the numbers because usually the larger players don't want to take the risks until after the numbers are out. That's just a tendency type of behavior. Okay. Now, all right. So with that being said, have I said hi to my people here? Stian, good to see you. By the way, if you don't have an exchange or a broker, or if you're looking for another one, consider the links in my description, okay, on TradingView or here on YouTube. There's one for Bybit, there is one for MEXC. Consider them. If you sign up, you fund an account, and you actually place trades, Stian gets a small fee, right, a small commission for that, and that helps him support the community immensely. So if you take advantage of that, or if you help out in that area, it would be much appreciated because it helps him do the great work that he's doing. Okay, so Alex, okay, good to see you. Sure, LP, welcome from Toronto. We got Glenn from Norway. All right, cool. Armand, good to see you. All right, Kai, hey, Kai, good to see you. Paige, all right. Hand pink waving, okay. Alice, good to see you. All right, cool. Your content, I appreciate that, Kai. All right, okay, cool. Tillen, all right. Hey, Tillen, how are you? Haven't seen you in a while. All right, cool. All right, so I see some of these questions here. We'll get to that stuff. Cool. All right, so just wanted to say hello. All right, now let's get into this Bitcoin chart, shall we? And here's what I want to talk about here. This has been a very tricky market. All right, so obviously the title of today's stream is Rules for Range-Bound Markets. All right, and on TradingView, I called it How to Trade in Active Environments, which is basically like the same thing, right? But saying it not exactly the same way. This environment has been very tricky, all right, especially since August. I mean, look at the price action just over the recent week, right, or week and a half. I mean, look at this price action in here inside of this area that you see, this rectangle on my chart. I drew this squiggle again because this is the scenario that I believe structure favors. In my TradingView article that I wrote yesterday, which I haven't seen a lot of views on, by the way, in that article, I highlighted the idea that, you know, in the markets, we're not looking to forecast the future because that's only a fool's game. What we're trying to do is we're trying to identify a range of possibilities and then put a probability on one that we think is most probable, always accepting the idea that markets are random and that it can go the complete opposite way for some random reason, right? That's the whole idea behind that. So I want to narrow the range of possibilities. So for example, Bitcoin going to zero, that while that is a possibility, that is not in the range of realistic possibilities right now. Okay, that's not something that I think is probable over the next week or two. So that's an example. Like that's not a probability that we would consider. But what is within the range, right? Now, and that was the point of my article, because of the location of where we are right now. All right, basically between 27.5 and 28.5, this area right here, right? We are fooling around in that area. Look what's happened in that area previously. You can see over here, right? We have this little peak or whatever you want to call that attempt at a rally right there, which failed right away. It swiftly gave it back. Well, look, I mean, we're still fooling around that same area. This is the type of context you need to be aware of, all right, when you're trying to decide how to shape your expectations for day trades or swing trades. Now, this stream has nothing to do with investing. I'm not really covering that here. So if you're wondering about investing, there, you know, you're going to have to go somewhere else. So I'm really talking about day trades and swing trades. And by the way, Bitcoin, whatever happens in Bitcoin, typically the altcoins follow. So you can apply this information to your altcoin as well, especially if it's like one of the top 10 most capitalized coins. So my point is, we've been fluctuating around inside of this range, and this range happens to be a resistance area. Okay. Now, okay, cool. It's resistance. So what? Well, when we consider that resistance area within the broader trend or the broader environment that we're dealing with, the broader context, I mean, we can go all the way back to April, or if not, we can look at like May or early June. And I mean, look where we are. Okay, have we gotten outside of this range yet? We haven't. We're still inside of this range. So the broader trend, or at least we could say the midterm trend, is range bound. We can't really call that bullish or bearish. We're still inside and we're fooling around in the middle of that range, which is the most random area. So that means when people start coming out with all kinds of crazy ideas and Bitcoin's going to 50K and they're all overreacting, you have to realize that we're in a highly random area and that anything can happen here. This is the worst area to be putting on positions with any type of expectation, really, right? Because in a range-bound market, supports and resistances typically hold. Now, this area right here, 28.5, 27.5, right? That area, that's not a major resistance. That's in the middle of the range, right? It's not a range resistance. The range resistance is up here, which is what is that, 30K? Yeah, 30K, right? Just over 30K. That's the range resistance. The range support is 25K. That doesn't change until we break one of those numbers. So if we can't break those range numbers, then it's safe to say, we can argue that Bitcoin is consolidating. Now, I don't care about the halving. I don't care about what kind of news is coming out. It's all nonsense. As long as we stay inside the range, Bitcoin is not likely to go anywhere. All right. Now, when you add to that the bond situation, with rates generally rising, I saw a couple of green candles on the bond chart, but those are meaningless. All right, we'll take a look at the bond chart in a moment. But when we have a rising rate situation, that puts a cap on this and all the altcoins or anything speculative. So that just underscores the fact that Bitcoin's going nowhere. That should shape your expectations. That's context. Okay. Now, and on the same note of context, oh, my chart's too small. Sorry, guys. Hold on. I've been talking for like 30 minutes and my chart's too small. Let me make the chart bigger so you guys can see what's going on. There we go. Sorry about that. I get wrapped up in talking. You see what happens? Okay. So anyway, yeah. Oh yeah. By the way, thanks, Alice. If you guys can press the like button or the boost button on TradingView, that's always helpful. Also subscribe to the channel. All right. Now, if you like the content. Now, so like I was saying, I was pointing out the range support, right, and the range resistance. And as long as we stay inside that range, it's safe to say we're going nowhere, right? So if we're going nowhere, that means that you should put weight on support levels and weight on resistance levels until one of them breaks. When I say support or resistance, I'm talking about the major levels, not minor levels. Okay. So that's 25K and 30K. Anything in between is basically going to be secondary or minor. So we can't jump to conclusions just because 28K breaks for a few minutes, right? It's meaningless. We're still at a minor resistance and in the middle of this range. So what I want to point out is this location, right? So when you're using a system, and I tell you, I emphasize this, and it's not just because I have a trade scanner, you must have a system. You must have a rules-based way to arrive at a trade idea. You cannot do it by feel, especially in this environment, because logic will definitely misinform you. I saw a question in the active investor chat on Friday, right? And the question was from Sam. And his question was about the non-farm payrolls number, right? Non-farm payrolls came out, the market sold off, and then it spent the entire day rallying, which made no sense in terms of logic, right? And his question was, how can you spot something like that? You really can't, right? Intraday, so when certain levels are broken, then you say, okay, we're going from bearish trend to bullish trend, and I have to respect that intraday. It's very hard. And logic will misguide you if you depend on logic. Well, this number came out this way. This market can't be going higher, but the market chose to go higher for whatever reason. Maybe the information that the market interpreted, the market took it as, for whatever reason, bullish. Okay. Respect what the market thinks. Don't try to outthink, don't think for the market, because the market will always know more than you. So it's confusing, yes, but this is why we have to respect price action, right? Respect the price action, because price knows everything. We only know a tiny little sliver of what's going on in the world. We don't really know what the financial market knows. That's part of efficient markets, right? It assumes that all the known information in the world is baked into price at the moment. That's why it's so important to embrace such a theory. Now, so with that being said, we want to use locations to help us shape expectations. So we talked about context, bigger picture, range bound. Bigger picture, range bound means I respect support, I respect resistance until one of them breaks. So until we have a break, right? Until we break 30K or we break 25K, I have to expect that price will stay in this range, okay? And no opinions, well, it's going to break 25K because blah, blah, blah. It's all meaningless. Until it does, that scenario doesn't exist until it does, right? So that means as a trader, especially a day trader or a swing trader, you want to pay attention to where you are and what's happened there recently, because while markets are generally random, levels do have a memory. And this is where now we kind of get away from efficient markets, because if levels have a memory, efficient market says history has no bearing on the future, but that's not exactly true. Traders have a memory, right? So that's why we have that's why we have double bottoms. That's why we have history repeats itself, because people are caught in positions, right? That's generally why levels have a memory. People are caught. And when the market revisits a location, people will likely act a certain way. How many times have you been in this situation where you're long something, it goes against you for a while, it's painful, and then one day it goes back to break even, and you have the opportunity to get your money back for break even? What are you likely to do? Close the position and get your money back for break even though that position may now continue in your favor and double or triple. How many times have we seen that, right? But since you had the opportunity to break even and to get rid of this pain, you do it. That's a tendency. That's part of human nature, okay? So that is a tendency that is present in the markets, and I've seen that countless times. You can see that by just drawing horizontal lines on your charts. So that's a behavioral thing. The point is this: when you're in these situations, right, and how to deal with this, you have to wait for a level before you do anything. You can't think you see something and say, oh, I kind of feel this, I kind of feel that. You have to wait for a level. So you have to have these levels identified in advance. When you're looking at a market like Bitcoin, or you're looking at whatever market you're looking at, right, the levels don't really change that frequently, especially when you're looking at a daily time frame, which is where you should be looking. You should not be using a 1-minute chart for this, right? So we have our minor resistance in this 28K area. We have a major support at 25K. So that means I should be considering what at 28K? If I'm going to do anything, what should I be thinking? Where should my expectations be? This is the interactive portion of the stream. You guys tell me, what should I be thinking, or what should I be leaning toward, or what kind of expectations should I be forming at this location? What should I be thinking? Anyone want to chime in and tell me? It's almost like someone knew on Friday that was going to happen. Well, there is inside information, and there are people that do know things before other people. That's definitely a true thing. All right, so Paige says sell, take profit. Okay, that's not the answer I'm looking for, but that's close. What should I be thinking? What should I be thinking if, let's say I don't have any trades on, I'm flat, okay? What should I be thinking here? What should I be thinking? Should I be going long? Should I be aggressively going long? Should I be excited to be going long? What should I be thinking here? Not exactly, not taking positions. Why we don't analyze Bitcoin in multi-time frame to confirm? Because we don't need to. We only need the daily chart to get context from, right? If I'm going to look at a 4-hour and a 1 hour, that's amateur stuff. That's nonsense, right? You're just playing. All you're doing is fooling yourself with that nonsense. The bigger picture is all we need. Unless we're looking for a specific day trade or a specific swing trade, then I can go to a specific time frame. Right now, I'm just looking for context. All right, that was a question here in TradingView. Okay, so thinking about a short. Yes, that's it, Paige. You should be basically thinking short. Doesn't mean you're taking a short, but you're thinking, I probably, so here's my point. In a location like this, you should be thinking shorts have more of a probability, or there's a greater expectation of a short than there is a long. Should I be buying at a resistance level like this especially in a market that's not exactly in a bullish trend, do you realize that three-legged structures like this, right? A, B, C, you realize those are corrective movements in terms of wave counts. They usually correct in three legs, right? So if that's the case, then this is not a trend. This is likely to just go right back to 25K. So I should, if I'm going to do anything as a day trader or as a swing trader, I should be leaning on the short side if I'm going to take risks, right? Because that's what the structure favors. It could be wrong. This thing may be just a minor consolidation and it may break out higher, right? In a few days, maybe we see something like this. That can happen. That's a possibility, but that's a lower possibility in my opinion, because we're not in a defined trend. We have a bond market that's working against this thing, and we're sitting at a resistance level, a minor resistance level, and it's also a highly random area because it's the midpoint of a range, right? So longs are less favored here. Does that make sense? That's what I'm trying to get at, right? Compared to if we were at 25K, okay? If we were in this area here, we should be thinking, long, right? Not necessarily jumping in. We should be waiting for confirmation. But if a long signal develops in this area right here, then we know we have some room to play with, right? This would be our profit area right there. That would be a potential profit area going back into the resistance. Those are rules to thrive in a tight range like this. Okay, so if you're not at a location that makes sense, like currently, our current location does not make sense for longs, especially for swing trades. You know, day trade, if you're trying to grab 100 points or 50 points, whatever, then it's no problem. You know, that's when you go to your 5-minute chart and you're just trying to grab a small bite off of a minor support or whatever within this area, right? This little area has its own support and resistance levels, but they're minor. They don't really carry much weight. Okay, so that's why you don't take swing trades long in such an area. You consider day trades or even smaller. You know, you're working on a 1-minute chart, you're grabbing whatever and you're out. That's the mindset that you have to have when you're working in such a small area. Keep in mind, I'm looking at a daily chart here. Okay, so when you're working in a tiny little area like that, that is when you pull up your 5-minute chart. That is when you pull up your 15-minute chart. But you can't do any of that unless you have rules. If you don't have rules, you're just going to be all over the place, especially in a situation like this. What the hell was that? All right, anyway. Hold on, people. Hold on a second. Sorry about that noise. Hold on. Let me, hold on a second. Hold on, you guys. Hold on, you guys. Hold on. Hold on, you guys. All right. Hold on. I apologize. I'm just going to have to get through that. Hopefully that's not too loud. All right. So anyway. All right. Hold on, you guys. I can't do anything with this over here. All right. I'm just going to continue. All right. So guys, just try to bear with me on this. All right. So like I was saying, you have to be able to, yeah. Okay. All right. You guys can't hear. All right. I guess it sounds just a lot louder where I am. All right. Anyway, so guys, listen up. So here's the thing, right? So like I was saying, right? So if price is stuck in this area here, you guys got my drift, right? So here's another point that I want to make. If you don't have a system, if you don't have a rules-based way to go about this, you're going to make decisions based on feelings, right? And you can't do that. If you have hunches, you have feelings of fear of missing out, you're following someone else and they're telling you buy Bitcoin now because blah, 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 that's only going to cause problems for you, especially in this type of environment. So what you have to do, right, is you need some sort of rules-based system. Now, there are a number of ways you can arrive at this. I'm not going to get into detail on that, but that's one of the reasons why I developed my trade scanner, because it basically what it does is it gives me a way to not have to sit here and struggle through all this nonsense, right? And figure out, should I take this long? Should I take this short? Right? Well, at the same time, when you get a signal from a system, you have to understand that the system cannot see this context. So you have to see it, right? That's a very important point. And that's what I try to teach my followers who use my system is, people who have access to the trade scanner, I want them to see this context so that they can better, They can better judge the signals. So let me just give you a quick example, right? In this section right here, if we're getting long signals from the trade scanner on Bitcoin, right, it's possible that it will call longs in this area because it can't see this location. It can't see that this is a resistance. What it can see is that momentum recently was bullish, right? It can see bullish momentum. So that's what it's basing it on, right? It can't see that we were in the middle of this, everything that I just described about this location. It can't see that, right? So if it can't see that, it calls the long. Now you have to use your head on this, and you have to say, okay, the trade scanner called a long, but this location is not an ideal long location. It's obviously better for shorts, right? Based on this structure. So what do? You have a few options, right? And these are the options that you must run through. Number one, you can avoid the trade altogether. I'm not taking this trade. I don't like the location. That's a valid idea, okay? Even if the trade works out, you don't like the location, no problem. Move on to the next one. The second choice that you have is I can take the trade, but I'm going to babysit this trade and I'm going to expect less from it. So even though the fixed take profit is 1.5 to 1 reward risk, all right, maybe you say, I'm going to get out at 1 to 1. I'm just going to take whatever I can get, right? And I'm going to babysit this because I know I'm going long in an area that I shouldn't really be going long. Does that make sense? So those are really the options that you have to run through your mind. In fact, I just want to mention something as well. When it comes to something like that, we're going to do an update, which we haven't done yet on the trade scanner, but we're going to do an update where right now we have a fixed take profit for those of you who have access to it, right? It gives you a take profit level. We're going to have a natural take profit level. And what that's going to allow you to do is stay in the trade longer. Because sometimes you get a market movement, like something like this, right? And the trade scanner may have been short something like this. Actually, when I looked at the back test, it was short. It was short something like this, right? And the fixed take profit is only 1.5 to 1 reward risk. So maybe you get out of that with 200 or 300 points. You're like, all right, I made a good trade. And then it runs 3,000 points. And you're like, man, I would have liked to have captured some of that. Well, I have a filter that I've been working on that actually allows for that possibility. This example right here is extreme. I mean, this situation right here actually happens to be very extreme. That was a 12 to 1 reward risk, which is very unusual and very rare. But if on the average, you're going from 1.5 to 1 to now 2 to 1 or 3 to 1 because of the natural exit, that's going to improve your profitability. That's, again, an example of why you should have rules to enter and exit, why that's so important, okay? So anyway, so you get the idea. Can I take a trade for short? I'm not saying to take a trade here, all right? This is actually, there's no setup. There's really no reason to go short. Let's see here. When I look at the 4-hour chart, there's no reason to short this right now. All right, the location says short, but there's no setup, right? The whole idea is the rules give you the setup. The rules make it so that you don't have to be indecisive. Say, okay, the rules tell you, okay, I have a short setup or I have a long setup. And then from there, you decide what you're going to do. All right, I need your help. I have been buying DOT for 6 months. And DOT? I can't help you with that, okay? You're dealing with a rising rate environment. All right, look, I got a few more minutes. This noise is really hard for me to do this. Let me real quick let me go to what do you call it? The bond market here. And then I want to just address a couple of questions real quick. This is the bond market, right? So look at this situation that we have in the bond market. Okay. Your short dot. Okay. So the bonds, see the bonds are trying to rise here. You see this? But this is meaningless in the eyes of the bigger picture. I bring up the bond market. This is the 10-year note. I mean, because look, we recently made new lows. Banks haven't started failing yet, but we have this lower low situation. This little pop in the bond market is pretty much meaningless, right, on the bigger picture. So as long as that stays the same, as long as that continues, right, as long as we see like a lower high and a lower low develop, pressure still stays on these markets. Now, an interesting thing. Now, I want to address this one question real quick. Alice, you asked a question in the active investor chat about, is there some sort of standard portfolio, what do you call it, formula for how to invest, right? And you mentioned that you were heavy mostly tech stocks, right? So here's the thing. That's where the business cycle comes in. And that's where really you should be aware of the bond market. Now, and that's where you should really, there is no formula. Like if you go to a standard, financial advisor, they're going to ask you how old you are. They're going to say, based on your age, this is what your risk should be, and you should have this much % in bonds and this much % in stocks. That's pretty much what they tell you. And they have some kind of predetermined formula, right? Which is only for their benefit anyway. If we look at this from the business cycle perspective, I mean, look what's happening. The NASDAQ is back to 15K, right? And this is, again, this is tech stocks. NASDAQ is back to 15K in a rising rate market. That's pretty impressive, okay, I have to say. We should be seeing the opposite of that. So in this rising rate environment, what I would suggest is you don't want to keep putting on more and more tech stocks, but any chance you have to take some off the table until rates start to turn would probably be a good idea. I mean, because as rates continue to rise, this is where the trouble should be felt the most, right? In something like this. But this is resilient. I don't question it. I don't sit there and say, I wonder why. I can't figure it out. It doesn't matter why. It's a higher low. It wants to work its way higher. And this is in the middle of a rising rate environment. So again, logically, that may not make sense, but we have to accept it because the market knows more than us, right? Okay. Yeah, no, I think there's some kind of, they're doing some kind of construction or something. Okay, so anyway, let me just, as long as you guys can hear me okay. Just a couple more. I just want to answer one. There was another question in here that I saw real quick. Okay. All right. Yeah, it's construction. Wait until okay, I'm just looking at the questions here real quick. Almost. Yeah, okay. Just going back. Yeah, bonds are moving. So exciting. Santa rally. Right, that's what I was thinking too, Alice. This could be the bottom of it. This could be the bottom of it. All right, coin, that's it. All right, let me take a look. Now, coin is just going to be a reflection of Bitcoin. I mean, look at that. Right? I mean, Bitcoin is trying to rally recently. This is going to be an effect. This is going to have something to do with Bitcoin. It's interesting that this thing is trying to find strength in rates that are generally rising, right? Although we have a couple of green candles on the bond market, that doesn't really mean much. If this thing holds these lows, it's possible. I mean, if that low holds and we break this resistance here, we may start to see a rally. And we are in Santa rally season. Keep that in mind, right? Over the next couple of months, that's usually when that stuff starts to happen. All right. So I'm going to leave you guys with this. Don't get caught up in too much logic. Just follow the price. Okay. Follow the price. Price knows everything. If you get too caught up with opinions, you'll have that situation that you had on Friday where we had a non-farm payrolls that wasn't exactly market friendly, right? And started out bearish, probably sucked in a lot of shorts. And now look where we are, right? We have this rally going on, even in the face of geopolitical problems and all kinds of stuff like that. Okay, so I'll leave you guys with that. If you guys have any questions, you guys know where to find me. Like I said, I've been absent from the chat, but I will be answering some important questions that I saw in there. I think I touched on them here today, right? Alice, I got your question. Alex had a question about the signals coming from the trade scanner over like a Saturday and Sunday, while you would think volume is lower and they would be more random, I still have seen some good trades, like, that would be called on a Saturday. So I can't really judge it that way. All right, just to answer that question real quick. Anyway, so guys, thank you again for all of your participation. Thanks for working out, for sticking it out with me here. If you have, check the links in the description. Press the like button, press the subscribe button, join the Discord community. It's free, and all that other stuff. All right. So, and thank you for watching. Enjoy the rest of your day, or the rest of your evening, wherever you are. And again, thank you for watching.